Islamic finance, Sharia finance. What are these phrases? What do they mean? Are they the same or are they different? In this video, I'm going to explain very briefly what Islamic finance is, what Sharia finance is, and if they are any different or if they're the same. Islamic finance actually is a modern term which has been coined, this phrase has been coined by modern scholars and also practitioners because conventional finance has many structures and many practices within it that go against some of the core principles of Islam. So therefore, the scholars and the practitioners have had to coin this new phrase called Islamic finance. Otherwise, Islamic finance isn't Islamic finance actually, it's finance itself. And what is finance? Finance is to ensure that an individual, the economy, an individual has their own economy, a family has their own economy, a business has its own economy, a country has its own economy, to ensure an economy, a financial system is running effectively in a free market situation with growth and effectiveness to benefit society and benefit businesses and benefit individuals in turn as well. So Islamic finance isn't Islamic finance actually, it's finance itself. But again, because of the conventional finance which is rife with interest and speculation, then we have had to term this a new phrase called Islamic finance. So is Sharia finance the same? Sharia finance, for all practical reasons, is exactly the same as Islamic finance. Islamic finance gives the core principles and Sharia is the application of that finance as well. So the Sharia finance more accurately would be used to describe the structures within the financing that has been promoted by Islam. But the main thing is actually the finance should not go against the core principles of Islam, and the prohibitions of Islam shouldn't go against them. So of course we know the prohibitions of Islam in finance specifically are interest, excessive risk, and speculation and gambling. So as long as finance doesn't go against these particular prohibitions, then that finance is allowed. The principle of any al-aslu fil buyu'i al-ibaha, that the origin or the asl, the foundational principle of any transaction is actually that it's allowed, unless it goes against the core prohibitions of Islam. And as we know, interest is one of the major sins in Islam. So Islamic finance and Sharia finance are used interchangeably just to describe this ethical framework that we have. So why does Islamic finance, why is it so important? Because as individuals, we need finance to live. Yes, we need finance to make sure that we can run our house, that we can run our businesses. Number one question that people have is that how can I buy a property? How can I buy a home? That's the number one concern that is facing the market at the moment, that how can I buy that? So the structures in place have been designed to make sure that when you purchase your house, you're not taking an interest-bearing mortgage, that you have a structure which enables you to own your home in a way that doesn't go against the core principles of Islam, so you can purchase that. So this is the biggest thing in with regards to individuals. The other thing is your savings account. If you've got savings, especially with conventional banks, then they pay you interest. That interest is haram. You're not allowed to take that. Yes? Actually, taking interest is worse than giving interest. Taking interest is actually the real asl of the hurma, the prohibition in Islam. So taking interest is not allowed in savings accounts. You can't have them in conventional banks. Also ISAs and all of these other things which pay you interest, you're not allowed to have them. So that affects individuals as well. What about your car purchase? Car purchase is it's the second biggest purchase that you make after your house. So how do you finance that? Let's say there's a person who does deliveries and they need to buy a van, for example. And that van, it costs, £50,000 to purchase that van because they need to do long distance deliveries. And the person doesn't have £50,000. Now, if they don't have that van, or they have a very cheap van, it's going to break down halfway in the middle of the road and they won't be able to make the deliveries and they won't be able to earn an income. So these are all questions that we have as individuals, as Muslims, that how do we live our lives according to the principles of Islam, and we can get the finance that we need. So what are the structures which are available? There are four main funding structures, three that are really big, and ijara is actually used, which is the fourth structure that I want to talk about. There's a fifth thing and a sixth thing called salam and istithna, which are more towards like trading principles as opposed to funding structures. So we'll talk about the other funding structures. The first one is musharaka. Musharaka comes from the word sharaka, sharik, which means partner. So of course, musharaka means partnership. And what kind of partnership are we talking about? We are talking about a partnership where individuals pool money together to fund a new business or a existing business if they want to purchase a business. So let's say, for example, there are two individuals, they want to purchase a business. And also with musharaka, you get equity according to your investment. So if there's two individuals and they want to purchase a business, let's say that business costs £100,000 to purchase. One individual may come in one scenario where they go 50-50. So they are equal partners because they put in 50,000, they get 50% shares each. In another scenario, you may have one individual who comes and puts £30,000 towards 100,000, and another individual puts in 70,000. So of course, the person who put in £30,000 has 30% shares, and the person who puts in £70,000 has 70% shares, and hence is the major shareholder within that particular business. So musharaka quite simply means partnership, and it's one of the most popular ways that people do business, similar to an LLP structure, like a limited liability partnership that people have as well. The other structure, so the first structure is musharaka. The second structure I want to talk about is mudaraba. Mudaraba means silent partner, or in technical terms, limited partner. And what that means is that a person, a Rabbul Mal, someone who is a wealthy individual, an owner of wealth, Rabbul Mal means owner of wealth, then he comes along and he, for example, wants to get into the accountancy industry, just as an example. Now, he's not a qualified accountant himself, so what he will do, because he's got money, he will invest £10,000 into someone that he finds who's an accountant, an experienced accountant with a good business mind. So the Rabbul Mal will invest the £10,000, and that accountant will use his skills as a qualified accountant, as an experienced accountant, to now service clients. And they have a pre-agreed, pre-structured profit share that they have between each other. So the Rabbul Mal and the accountant, they have this pre-agreed profit share of 50-50, for example, or maybe 60-40. It is actually, there's no hard and fast rule in that, and that can be agreed in the contract that they have between each other. But you have the wealthy individual who's silent. He actually does no business activity. When musharaka, you can have business activity being done by all partners, or one of the partners, or three of the partners, or whatever it may be. With mudaraba, the investor has no business involvement in terms of the day-to-day running of the business. However, the Rabbul Mal, the person who owns the wealth, is the owner of all of the assets. So again, if, for example, with that £10,000, with the accountant who's the entrepreneur, who's providing his labor and his skills, let's say he had to buy a computer, and he had to buy accounting software, and he had to buy, a desk and rent out an office, that £10,000, it's gone into the computer, into the assets, into the accounting software. The owner of all of that is actually the Rabbul Mal. The owner of wealth is the owner of all of those assets, and it's the accountant who is doing the work and ensuring that clients are being serviced so the business can generate a profit and they take their profits share. So mudaraba is another structure that is used to finance business, to finance transactions. Most funds, whether it's a property fund or a private equity fund or any bank account, banks, Islamic banks, they all use mudaraba. So if, for example, you use the Islamic bank example, if I have £10,000 to put into a savings account, I am the Rabbul Mal and I've put £10,000 into the saving account. The bank is the mudarib, and they sign that contract to say that, okay, we will now invest that £10,000 either into a property or into a business, whatever it may be, and we will give you a return based on your savings. It's not interest, it's profit which is generated through investing activities on behalf of the bank. So you will get a return from your savings account. Same with funds, for example. If you're a high net worth individual, or if you're a sophisticated investor, or ultra high net worth individual or institution, you are putting money into the fund and you gain a profit. Now, funds, again, they have things like, private equity funds and modern funds, conventional funds, that have preferred returns and things like that, which are not allowed in Islam. There's no preferred returns in Islam. Everyone gets an equal return based on what they are doing. But that's a conversation for another video. So the second structure is mudaraba. The third structure is murabaha. Murabaha comes from the word rabaha, which means profit. Yes, it means profit by itself, meaning to profit from something, from a purchase, from a sale. So murabaha, actually Sharia finance market, all of the structures that we use to provide finance to businesses are all through the murabaha principle. So if you want to find out more about getting funding for your business, click in the link in the description below and book an appointment with us, and we can possibly get you some funding for your business or your property project, whichever it may be. But coming back to the principle, murabaha means cost plus profit actually. So for example, let's say I'm a business owner and I've acquired a large client, and that large client has made a massive order. Now I currently don't have the raw materials in my business to service that order, and that order needs to be serviced within the next 3 months, for example. Now, what am I going to do? Now, I also don't have the cash reserve to buy those raw materials to service this client. But of course, the client is waiting for their final product. What you could do is the business goes to a financial institution or a wealthy individual, and they say, okay, we've got this large order. It doesn't have to be in this way, but in this example, we've got this large order and we need to buy raw materials. These raw materials are going to cost me £20,000 to purchase. What that institution will say, okay, I will purchase these raw materials for £20,000, but I'm going to sell it to you for £25,000. So what's happened is that the business owner gets their raw materials financed through an individual or an institution who's willing to buy that raw materials and sell it to him for a profit. Now that business can go ahead and produce those raw materials into a final product and service their new client. So this is one of the examples in how murabaha is used a lot for property. In fact, 80 to 90% currently of the financing mechanisms within Islamic finance are used against the murabaha principle. Funds, like I said, they all use mudaraba. But murabaha is the third structure which is used. The fourth structure is ijara. Ijara means leasing. So leasing basically is, let's say I buy a car and I lease that out to a taxi driver. That taxi driver pays me a rent, a lease for the usage of that car. So I am the owner of that car and the taxi driver is renting it for me to go around and drop clients here, there and everywhere, whatever the taxi driver needs to do. Now there's two things. Either I can stay the owner of that car and just lease it and rent it out to that person for whatever time period that may be. Of course, let's say for argument's sake that the car costs £20,000 and I've leased it to that person for a rent of £1,000 per month, and I lease it to him for 3 years. That means over the course of the 3 years, of course, what's going to happen is that I've profited £16,000, £20,000, 36 months, of course. That means I've profited £16,000 by leasing that car. The other way, the most common way, is what you call the diminishing ijara. And that is when the taxi driver in this instance would pay me a rent, or pay the person who has financed the taxi car a rent plus buying the equity into the car as well. So eventually, let's say after 2 years, that taxi driver will become the owner of the car and they can go about driving their taxi. So ijara is the fourth structure. So now we've covered musharaka, which is partnership. We've done mudaraba, which is silent partnership or limited liability partnership, where one person is the Rabbul Mal and invests their wealth, and the mudarib, the entrepreneur, provides their labor. The third structure is murabaha, cost plus profit. The fourth one is ijara. Now we have two other structures which are called salam and istithna, and they are more towards how to trade. So for example, am I able to sell something which I currently don't have in my possession or ownership? And these are things like drop shipping. So drop shipping is not generally allowed in Islam, but we have many other examples in the hadith where some sort of financing mechanism on crops that are to be grown can be financed before the crops actually are grown. But this is not for this discussion. So the main funding structures that Islam has is musharaka, mudaraba, murabaha, and ijara. Now, why is this? It benefits rich and poor people. It benefits the investor and the business owner. Benefits the investor and the business person. Why? Because in Islam, wealth itself doesn't have any value. Yeah, and a person should not benefit from using his, just loaning his wealth. We have an ayah in the Quran in Surah Al-Hashr, is كَيْ لَا يَكُونَ دُونَةً بَيْنَ الْأَغْنِيَاءِ مِنْكُمْ, so that the wealth does not circulate between the rich among you. And even though the ayah is talking about, it's actually talking about the booty of war, the concept is the same, the principle is the same, that just because I loan a business, for example, £100,000, I can't benefit just for the giving of that money itself. Yeah, because what happens with these loan structures is interest. People get richer just by loaning money. If there's a profit that is generated in that business, then by all means, if an agreement has been signed, then you should benefit from the profits that are generated from that business. And yes, you will benefit, but also the person benefits. The loss also is borne on both sides, especially musharaka. So that's why it's very, very important to adhere to the structures that Islam has put in place. What are the other benefits? So in Islam, Islamic finance, you're not allowed to invest money or invest funds, money into prohibitive businesses. So number one, alcohol. Number two, like adult businesses like pornography or anything like that. Number three, like gambling. This is not exhaustive list. Number four, any other business which, for example, provides interest-based products. Yes. Number five, gambling. So all of these things, or the sale of pork, these things are not allowed to be financed in Islam according to Islamic finance. Why? Because it protects individuals, it protects society. In Islam, we have in fiqh called Maqasid al-Shariah. Maqasid al-Shariah means the aims of the Sharia. What is the aims of the Sharia? The aims of the Sharia are, number one, to protect the religion. Number two, to protect life. Number three, to protect wealth. Number four, to protect family and lineage. And number five, to protect the aql, the mind. So let's take a look at alcohol. This is one of those things that affects all five of these. So alcohol affects the religion, because when you drink, you're committing a major sin. Number two, it affects the life, because the more you drink alcohol, the more you harm your insides. Number three, it affects the family. If someone's a drunkard, someone's an alcoholic, they come home drunk every single day. Maybe they are abusing, their partner. Maybe they're abusing their children, whatever it may be. It just doesn't create a good environment. So a person alcoholic is harming their family. It affects the wealth. So the wealth, the more you buy alcohol, of course, you're wasting money on alcohol. And it affects the aql, your brain, your mind, your intellect. Because when you drink, you are covering your intellect. You have no sense of what's going on. So that's why Sharia comes in, and Islam says that no, you're not allowed to invest in a pub, or you're not allowed to invest in a brewery or a liquor store. And just like that, you're not allowed to invest in those things which harm society. So Islamic finance is there to grow the economy, to grow business, to promote free markets, however, to protect society at the same time. And that is one of the big blessings of this religion, is real ethical finance and a real ethical system in which everyone gets a share of what they're due. Why should you why should you go for Islamic finance as opposed to anything else? We have Sharia finance market has products available that if you want to finance your business, you come to us and we can look anything from £50,000 all the way up to £2.5 million, depending on what you want to do. Again, links in the description. Click that, book a call if you need to finance your next stage of your business. We'll see if we can help you out. Why should you go for Islamic finance over conventional finance? Number one, you are protecting your spirituality. So if you are a Muslim and you want to adhere to the teachings of Islam, then of course you're protecting your own spiritual self, and you're ensuring that your business is operating on an ethical framework. Ethical framework, ensuring you're not getting charged interest, to ensure that you're not in a business activity which may be haram, and to ensure that your business is essentially running in the right way. The second thing is why should you go for Islamic finance is because we need to grow this industry. This industry is in its infancy. There are 2 billion Muslims in the world, but the market is coming up to 1.4, 1.5 trillion at the moment, and it's growing, of course, but still in its infancy. If we think about how much money is out there in the free market, it's just unbelievable. I mean, trillions and trillions of pounds and dollars which are available in the free markets, and only 1.4 trillion for the Islamic finance industry. We need to grow this industry. The more that we can pump money back into this industry, the more we can look at those things which promote business, which ensure that businesses are funded to grow, and individuals can purchase homes with good structures which are according to Islamic principles, so that students, when they want to go into a vocational degree to become a doctor, to become an architect, to become whatever they want to be, that they are able to get halal finance to go and study. And also car purchases. This is, second biggest purchase that people have. So promote the industry. Let's grow the industry. A lot of times people say that we do this thing to make money. No, we need to make money to grow the industry, to ensure that we can pump it back. Yes, everyone needs to make a living, but we need to make sure we can grow this economy. And that's what I'm super passionate about. We've got Shariah finance market, which is funding businesses, and we're going to be growing our offering for the Muslims in this country, especially in the UK, but also we're going to go out everywhere else. So Islamic finance, I hope that's a brief introduction, a brief understanding of the structures that we have and why Islamic finance is so important to ensure that everyone comes to use it and we can grow this market. I'll see you in the next video.